Hello guys, and welcome to this part 2 of the School of the Candlestick Patterns. In the last episode we did talk about the basic about the candlesticks and how they form, and in today we will talk about the reversal patterns and how to read them and how to use them in the chart. So yeah, let's get started. Well, guys, we are all of us technical traders, and surely that's why you're here. And usually, technicians watch for price clues to alert them for a shift in the market psychology and to a shift in the trend. Yeah. So reversal patterns are these technical clues that we look after. Yet the term reversal pattern is somewhat of a misnomer, because I see it a lot of time. Traders, as fast as they see a hammer or inverted hammer, they go and enter the market for a long or a short, depends on the situation. Well, guys, a trend don't just end directly and start reversing the other way. This happens very rarely in the market. A trend changes usually slowly in stages, and the underlying psychology shifts gears slowly also. So a trend reversal signals imply that the prior trend is likely, and one more time, likely to change, but not necessarily it will reverse. A change in the trend may mean a reverse, may mean that we're gonna range for a while and reverse, or range for a while and keep moving the same direction. So let's take a look at this chart, and I will show you what I mean by that. So we had this this trend here, as you see, this downtrend. It was a clear downtrend, yeah. And many times we had our reversal signals, and as you see here, we have this hammer down here in this area, and yeah, the trend did halted and start going up. But did that change the whole direction of the trend? No, it didn't, because it kept going down from here. And the same thing happened back down here also, when we got this rejection at this support area, and all we got was a correction to the upside. And it happened also here, and we had another correction to the upside, and then we got this inverted hammer at this area, which also used to tell us that this trend will maybe reverse or halt or start ranging. And what we got was an actual reverse of this trend to the downside. And as you see at the end of this trend here, down here, we got also some reversal signals, but the trend didn't change directly in one shoot to the upside. Okay, the trend did find support and gave us some signals, and gave us a little bit of ranging in this area here, and then we got this inverted hammer at this area here, and we got this gap up correction and a real trend reversal and continuation to the upside. So what I want to show you guys in this slide, that please don't just look for a single candlestick pattern and go for it directly. Okay, we will talk about the patterns and the single candlestick stick reversal patterns and how they look, and we will try to look where to use them in the chart and where is the best way to enter on those signals. Yeah, so let me clean this chart and yeah, let's keep going. Well, those two single candle reversal patterns are very useful when you use them in the right place and the right time, and they are the hammer and the inverted hammer. We have some rules about those two candles, and the rules are that the real body is an up in for the hammer. The real body is at the upper end of the trailing range. The color of the real body is not important, so this section here could be red also. Sorry for my drawing. And the second rule, that it has a long lower shadow that should be at least twice the height of the real body. So this wick here, this wick should be at least the double size of the body itself. And the third rule for the hammer is it should have no or a very short upper shadow or upper wick. As you see here, this candle had a little bit of a wick, but that is not a lot of wick, so that's okay. And even better if it have a shaved head or no wick at all at the upside. And of course the inverted hammer have the same rules, but it is in the real body is at the lower end of the trading range, and the same goes there. The color of the real body is not important, and it has a long higher shadow that should be at least twice the size of the real body, as you see in this inverted hammer. And the third rule, it should never it should have no or a very short lower shadow. This one here, as you see, the lower wick is not very big. Yeah, there is some aspects that differentiate the hanging man and the hammer, or the inverted hammer and the hammer. And a hammer must come after a decline, and when the hammer is called a hanging man, it must come after a rally. Extent of the move before the candle, a hammer is valid even if it comes after a short-term decline. Yeah, but a hanging man should emerge after extended rally, preferably at all-time high. So when a hanging man appears, it is most better if it is after a very long-term rally to the upside, or at a very high value level. The hammer, when it appears in a downtrend, you can almost enter after that. It don't need lots of confirmation, but the hanging man should be confirmed. Okay, so the hanging man should always be confirmed before entering, and we will look at that in the charts when we keep moving to the next slide. Yeah, So how to use a hammer in the charts? As you see, guys, we have this chart here. When we had this is of course not the whole chart, but you can think that we have this downtrend, and as we said about the hammer before, it don't need a very sharp trend, but a downtrend is needed for you to use the hammer. So we had this downtrend here, and at the end of this trend we got this hammer down here, and that hammer appear also at the support area. Yeah, this line down here is our support. From looking to the left, we don't see this whole chart here, but this line down here was our support. And when you got a hammer after a downtrend at support, especially if it's a high value level of support, that should be much better. So this was a daily or weekly support down here, and that give you more confidence that this hammer will maybe reverse the trend, or at least halt it. So what you can do after you got this hammer at this important level, you enter the market at the next candle that opens, or many traders used to wait for the market to trade above the hammer 2 to 3 pips, and then enter the market maybe somewhere here, and they put the stop loss down below the wick of this hammer, because this wick now should act as support. And in this case this trade will be a winner trade. And as you see, we kept trading higher, and then we got another signal that this trend may halt, or at least make a correction or reverse. What we got was a correction after this inverted hammer here, and it is an inverted hammer because we have the body is the body of the candle is at the lower range of this whole candle, and the wick is at least double the size of the body, as we said. But after the hammer and this spinning top candles, the trend kept going up. So another time when we see that just getting one candlestick signal do not mean that the trend gonna reverse directly. Yeah, but the most important thing is to use those signals at the right place, because when we got that hammer, we maybe didn't have any resistance or any high value resistance at this area. That's why the price kept going up. The inverted hammer is also a reversal signal that we can use when we have it at the right place. And for me, the inverted hammer is also as the hanging man. It needs some confirmations. We don't have this whole chart here, but it is a chart that we can look at and talk about this situation. We have this downtrend, as you see, and it's a strong downtrend, and at the end of this downtrend we got this inverted hammer here, and as you see, after this inverted hammer we got this spinning top and a small body bearish candle, and then this bigger bullish candle that engulf those two candles, and we start trading higher. So The same goes here. If you get this inverted hammer at a important support area, daily or weekly levels, then you can act on it. You can trade it as it goes here. You open the trade at the next candles, or if you wait for confirmation, you want to see the market trade above the wick of the inverted hammer, and you make your entry, and maybe your stop loss goes above the candle before. Okay. The hanging man, as I said guys, the hanging man should come after a strong uptrend, and very preferably is it comes when we have all-time high or a very high level. And we have this example here. As you see, we have this uptrend, very strong uptrend, a lot of large blue candles, and then as you see here guys, the trend start shifting a little bit before we got the hanging man. Yeah, so the chart start getting slower to the upside, not as sharp as it was back down here. Yeah, so when we get this hammer here, we had already an inverted hammer at that same level, and that make us more sure that this trend is now maybe ending. And as you see, the sloping of this trend is getting very much weaker than before, and then we got this hanging man. As I said before, the hanging man, the best way to trade it is to wait for confirmation, and the confirmation did come with this gap here. Of course, if you want to trade this one, you should wait for a correction or a retest of the wick of the hammer, because we got the gap. If we didn't have the gap, you would be trade the hammer on this candle when it start to trade below the hammer 2 or 3 pips. Yeah, and after that we got this very nice reversal. We got this correction to the upside, another inverted hammer up here at the retest that show us that the pressure is from the upside, and we kept trading lower. So that was about the hanging man. That is also a good reversal pattern to look for, and don't forget, you should to look for them in a good place in the chart when you have good resistant, high value resistant. And we will look another trend reversal, and this is a chart of, I think this was a chart of the USD JAPY. And as you see guys, at this level here we got this inverted hammer. This was an important level that was testing a structure from before, daily and weekly structure, and we got this inverted hammer at this level, 2 small candles after that, and then the break. And as you see, because this is an important level, this huge candle came after that, because an important level need bigger candles to break. But one more time, I will be talking about the importance of not taking all the signals, because many traders were thinking that this inverted hammer here will reverse this trade, this trend, and maybe enter it long, and was expecting the market to move all the way back up to here. Yeah, but that didn't happen. All we got was a correction to the upside and a trend continuation. One more time we got this hammer here, and what happened that was just we traded a little bit above it, we got another inverted hammer and kept going down. So once again guys, not all the signals, you should not take all the signals as total reversal of the trend. But at this level here we had very strong support from the left. We don't have this whole chart, I'm sorry for that, but we got this hammer down here, and we didn't start trade above it directly, we did close below it, but we see that the trend is now, the slope of this trend, as you see, start to getting weaker, and we start trading a little bit higher, and then we gapped up and we kept trading higher and higher. Sorry, one more time. We got this inverted hammer that many traders maybe look at it as a reversal, and if you did take this trade to the downside, I wouldn't say that that should be a bad trade, because we are in a downtrend at this time when we got this one. This whole trend was to the downside, and you maybe was thinking that we have resistance at this area here, and you enter this inverted hammer to the downside at the open of the next candle, then you got stopped, and that's okay. But that was also an aggressive entry. Many traders, that's why many traders used to wait to the price to trade below this inverted hammer and then enter the market and with a stop loss above here. So if you were a bit of conservative trader, you wouldn't enter this one at all, because the price didn't trade below the inverted hammer. And when this happened, guys, when you see inverted hammer or a hammer on a good, not the perfect place, but a good place, and you see that the price is going to trade above the wick, this should be a very good entry, because many traders was short on this hammer maybe, and their stop losses was at this area up here. And when that happened and the hammer or inverted hammer or a reversal signal fails, usually you get a very good move to the upside and with a good momentum, because all these stop losses will give this a fuel to keep going up. And as you see, we got very good candle after that and a gap up, and the trend kept going to the upside. So that's also another way how to use a failure of a reversal pattern to give you more momentum to the upside. So yeah guys, I think that was it for today. I hope you enjoyed this session. Please give me some thumbs ups if you like it. Put some feedbacks in the comment section below, and yeah, why not share the video so other trader can get the benefit of it. For the next part, we will be talking about the engulfing patterns, and the same things goes there, where to use them on the chart, and how to trade them when you see them. Yeah, and the engulfing patterns are also reversal patterns. So see you next time. Bye bye.